Hi and welcome to Protect and Invest with Marsha. Thank you again for stopping by on this space. Today I'm just going to really share with you a few points you need to consider or that you should consider when it comes to determining the amount of coverage that you may need for your life insurance policy. All right. And interestingly enough, there are people out there that actually don't have sufficient coverage. People may not even know how much they think they would need to pull out. So hopefully this advice is going to help you to think about maybe how much you may need. Please keep in mind that this video is just for educational purposes. It's really just to give you information that you can take home with you to think about. I'm not saying you need to do any of these things, but it's certainly something you should consider. All right, so there is an acronym known as D.I.M.E, D-I-M-E. All right, so D.I.M.E basically stands for four major expenses you want to consider when pulling out life insurance coverage. The first is the D. D stands for death expenses. Okay, so when someone passes away, right, there's oftentimes going to be the funeral costs, the burial costs, and the repast, and the viewing, and all that stuff. So anything dealing with the direct expense of someone's death is what you need to cover. Now here I'm in the state of Florida, and in the state of Florida you may experience an amount of $7,000 to $12,000 to do a funeral for somebody. So think about that sum of money and how much you think you would need to be buried, or to bury somebody in your family if something like that was to happen. And then two is the I, right? I stands for income, right? Income replacement. How much money would you need to pull out in this policy that in the event you're a breadwinner or a member of your family passes away and now you need to replace their income? Okay, so think about how much, think about your monthly expenses. Add up your monthly expenses and think about how much of that you will need for maybe several years out from the time that person passes away, especially if you're not trying to pick up a second or a third job, or if you're not trying to scramble to find a way to, make up for the loss of income due to that person's death. The next is the M, all right? The M stands for mortgage or other debts, all right? So mortgages are very, very, very big, very important. It's unfortunate that when people pass away, and they're like the main breadwinner, or they help with the mortgage costs, and if they go, if they pass away, obviously it may be difficult for families to hold on to their home. So if you want to make sure your family can keep their home, it's going to be important for you to think about taking out an amount that can hopefully pay off your mortgage, because if you do that, your family keeps their home. All right, that's one less worry, one less stress to deal with. In addition, you want to consider other debts. So if there are any car loans, right, where maybe your name, you have joint borrowers on a loan and all of that stuff, just remember someone else's debt can become yours, so be careful. Or you could be sharing loans, and that can be a burden on you to carry on after someone's death. So put all those expenses together and try to find coverage for that. And then lastly, you have E for education expenses for your children. So if you have children, if you want to have children, you may want your children to go to college, or you may want to make sure that they have enough money left so that by the time they turn 18, it's something that they can start off with. So it can help pay for their college, it can help pay for programs, or any sort of career building opportunity for them to hopefully carry on in life even after you pass away. So all in all, it's very important for people to think about these four different points when pulling out coverage. Like I said, interestingly enough, there are people who are under covered, right? They don't have enough coverage and they don't know that. Okay, and so it's important for you to have a conversation with your family. Make sure that you come up with a number that you're comfortable with. Ultimately, it's up to you. I understand that everyone's budget is different, but in times like this of the unknown where anything can happen, I mean, we came through a pandemic, people passed away unexpectedly in their 30s, in their 40s, in their 50s, and if they didn't have proper coverage, they could have been putting their family in a very serious situation. And we don't want to be in a situation where we didn't do the best we could when we had the time. So with that being said, go ahead, follow me, and if anything, you can always book a financial services overview with me and we can stay connected. Have a good one.